Hey, what's up, AJT fam? I'm going to do a recap of this morning. We do have some earnings, FDX earnings coming up after market, so we'll be kind of looking at that. But want to reiterate this message. So those of you that were in the first 90 days of trading yesterday, you kind of got the gist. You got the whole presentation, but I want to reiterate this. It's not the fastest or the smartest traders that survive. It's those traders that can best manage change. Those traders that can improvise, adapt, and overcome. Those are the traders that survive. And I don't even like using the word survive. I want to say thrive. Okay, I want to say thrive. And that's, what I have in here. You adapt and you thrive. That's what it is. We don't want to just survive the market. We want to thrive in the market. That's our number one priority. So, a couple of things you can do during this time, this cycle in the market. There's a lot of things happening. Number one, this is the 6-7 week lull between earnings season. We don't have a lot of stocks reporting earnings, so the volume and volatility is going to be a little light. On top of that, we've got all of this geopolitical and economic stuff that's kind of affecting what's going on. So the market is a little tough right now. It's really choppy and, really volatile. And it's real easy for us to get stopped out trying to use our traditional trade management stuff. And a lot of these stocks is really difficult for us. So one of the best things you can do is slow down. It's one of the best ways to deal with the changing stock market environment. Just slow down. I know it's a bad word. It's a concept that traders, especially day traders, don't like to hear because they like to make their money fast and, move on to the next opportunity. But in this market, we need to slow down. If we don't, we can very quickly hurt ourselves. So there is a huge caution sign that is warning you, and it's the volatility, the choppiness of the market. It's warning you to slow your ass down. You don't necessarily have to stop, just proceed with caution. Now, if you don't like this market environment, and you don't have, you're not at the point where you could withstand the bigger swings and everything, then guess what? You can stop. You don't have to trade. There's no rule that says you have to trade. Okay? No rule. So just slow down. Take your foot off the gas. If you need to pull over and stop, do that. But don't feel like you have to trade or you have to do this or have to do that. Because you don't. Next thing, stay flexible. This quote that Bruce Lee shared a while back, really, hits the nail on the head. It said you must be shapeless and formless like water. When you pour water in a cup, it becomes a cup. When you pour water in a bottle, it becomes the bottle. When you pour water in a teapot, it becomes a teapot. Water can drip and it can crash. But become like the water, my friend. And that's exactly what we have to do. We have to be the water. Water adapts. We have to adapt like water. We should be able to take the shape of whatever the market conditions are. Just like the water has taken the shape of the pitcher, and as you pour it out, it takes the shape of the glass. we have to be that flexible when it comes to our trading and adapt to the different market conditions. Again, if we're not comfortable doing it and it just doesn't sit well with us and it doesn't fit our risk management protocol, nothing wrong with taking a seat on the sidelines and taking a rest. All right, last thing I want to share with you is it's very important to know your market cycles. It's part of learning how to read price action. We covered this in the first 90 days of trading. We covered how to read market cycles, how to adapt to the different market conditions, and how to identify accumulation, advancing, distribution phases, and declining, and what we should be doing in each one of these. If you don't have that down yet, go back and go through it, because these are things that's going to help you through this time. Now, yes, we're not going to make the same money that we were making 6 weeks ago. Okay, yes, the risk management is going to be a little bit worse. Hold on, we're hitting the shorter side of my target here. I was looking for 427. It's getting hung up here at 427.50-ish. So I'm going to take some here where we're getting hung up. But I want to really stress that the risk reward, however, is not going to be as good. We don't get the big sweeping moves all the time. Now, there'll be a stock here, a stock there. The problem is we won't be in that stock. Okay, I could be trading Tesla, but Meta or NVDA could be making a big move, and I'm getting chopped around in Tesla. It happens. We see it every day. I'm in one stock. Some of you guys are in another stock, and I'm getting chopped up and chopped out. It happens. So the opportunities are there, but most of the time we're going to take shorter profit targets because that's what the market is giving us. So we're not going to make as much money. At the end of the day, our risk reward is going to be a little bit worse. But again, you can accept it and trade and take what the market gives you, or you can not accept it and stay on the porch. There's no shame in that. Again, I'll mail you a postcard from the road. No problem with that. But you have to make that decision. All right, let's take a look. This morning, of course, I'm having a slow time adjusting. By the time I get comfortably adjusted, the market will switch back and we'll be in earnings season again. But I was looking at the opening range breakout. I wanted to take it over the pre-market level. See if I could find it. No, it was yesterday's high. That's the one I was looking at. It was yesterday's high here. So once we took out that, I was happy to get in, looking for the next level at 440.40. And it failed. So instead of me bailing out here, which is what I should have done, I said, okay, I know this is, and this is one of the things that I adapt to doing. I said, look, here's a trend line right here. We are trending up. Okay, let it pull back. If it pulls back, I can add. All right. And, it just didn't work. It just didn't work. We lost the trend and we had to bail out of this. Okay. No ifs and buts about it. We had to bail out. So yeah, I took too big of a hit. Because for me to trade this way and for me to give it this type of room, I should have only been in 100 shares. But that was my mistake. That was my error, and I've got to deal with it. So I wasn't gonna trade it inside all of this. We kind of waited, and it finally broke down a couple minutes ago before I started doing this. So I got in, hit the first target, and then you see I had to take it off at break even because it bounced. These are the type moves we're gonna see. We're gonna see them break out. We're gonna see them hit our target. I wanted 427. The market was telling me you need to bail out here. We were looking at the price action, and that's why you saw me take it off here. And then we just finished up. So it's what I have to accept. We're gonna get smaller moves. We're not gonna get the full move. And I could either accept it or I can go home and sit on the porch. I'm going to accept it and trade. Meta was opening range breakout. Only ended up getting a base hit on this. Here's the opening range high. Only got a base hit on it. But that's fine. I mean, I don't mind base hits. I really don't. You add enough of them up together, you can end up with a pretty decent day, as long as you don't start out in the hole like I did. But another decent base hit, and here I could have gotten in short here. Just like taking the same move I took on NVDA. I could have done both of these. But, I just stuck with NVDA. And the last trade I took today, the last stock I traded today was Tesla. And Tesla was one I held overnight. So here was a cover on Tesla, and then the bottom fell out, and I ended up having to stop out at break even. So that was disappointing. And then we bounced, so I bought it. Again, I was anticipating the break, wanted to take some profit up here, and we got into one of those phases. This happened to be a distribution phase. But we were sitting on top of all of this support. So for me, I'm like, this could be accumulation. We could be making a move up, but it didn't. It gave up. And so I had to get out of this thing. So here, we bought, took some profit here, bought back, added back, and just took some profit here, added again, and that's when we nailed this move. Bought again off of this level here, which was the 5-day, and got a nice little chunk of change. So pretty decent day after my NVIDIA debacle. And this is not textbook. this NVDA trade was a complete error in judgment on my part. That's all I can say. Not holding it because that was kind of the plan, but getting in the wrong share size is what made this hurt me more than what it should. So I should have $700-800 a day, maybe $1,000 a day with base hits, and a couple of good ones, but it's not gonna be that. But we do have good God Almighty. But what we do have, we just broke the low. See if we can keep going to 425. But we do have earnings. We do have FedEx earnings this afternoon. So that could turn this okay day into a really, really, really good day. So we'll be keeping our eye out for that. But that wraps it up for our recap today. I'm gonna sit here and trade this, see if we can get to 425. I am gonna take some profit through 426. We get a significant dip, maybe around 425.75 ish. I'm gonna put it in. I'm gonna put the order out there so I don't miss it in case we get the dip. There we go. And then the next one, I'm looking at 425. It's 330. That's about what I want out of that. So I'll put my order out at 425 and see what we got. So I hope you guys had a great day. Have a great rest of the day. Stay safe. And I'll see you guys first thing in the morning.